Welcome to Intelligence Gateway.
Art of the Start Turning Ideas into High-Growth Business. Lecture 7. In today's lecture, we will learn about funding your future, navigating the world of investment. 1. Introduction. 2. Sources of funding. 3. Creating a pitch deck. 4. Identifying potential investors. 5. Negotiating deal terms. 6. Financial management. Introduction. Welcome everyone to today's presentation on funding and financing strategies for high-growth businesses. As entrepreneurs, we all know that securing funding is crucial to take our business to the next level. But with so many options available, it can be overwhelming to decide which ones are right for us. In this presentation, we will explore the different sources of funding available, discuss how to create a compelling pitch deck, identify potential investors, negotiate deal terms, and manage finances effectively. By the end of this presentation, you will have a better understanding of the funding landscape and be equipped with the knowledge and tools to secure investment for your business. So, let's dive in. Sources of funding. Bootstrapping is a common approach for startups that involves self-funding or using personal savings to launch and grow their business. The advantage of bootstrapping is that it allows entrepreneurs to maintain control over their company and avoid giving up equity to investors. However, the downside is that it can be difficult to raise significant amounts of capital through bootstrapping alone, which may limit growth opportunities. Angel investors are high-net-worth individuals who provide funding to startups in exchange for equity. The benefit of working with angel investors is that they often have experience in the industry and can provide valuable mentorship and connections. However, the downside is that they may require a significant amount of equity in exchange for their investment. Venture capital firms are investment companies that provide funding to startups in exchange for equity. The advantage of working with venture capitalists is that they can provide large amounts of capital and support for growth. However, the downside is that they often require a high level of control over the company and may push for a quick exit strategy. Creating a pitch deck. A successful pitch deck is a crucial tool for any high-growth business seeking funding. It should tell a compelling story that captures the attention of potential investors and clearly communicates the value proposition of your business. The key elements of a pitch deck include identifying the problem you are solving, explaining your unique solution, describing the size and growth potential of your target market, and introducing your team. It's important to present this information in a clear and concise manner, using visuals and data to support your claims. To create a visually appealing and persuasive presentation, consider using a consistent color scheme and typography throughout your deck. Use high-quality images and graphics to illustrate your points, and avoid cluttered or busy slides. Remember, less is more when it comes to design. Finally, practice your pitch and be prepared to answer questions from potential investors. Your pitch deck should be a starting point for a conversation, not a comprehensive document. Be confident and passionate about your business, and convey your vision for its future success. Identifying potential investors. Identifying potential investors is crucial for securing funding for your startup. Start by doing research on investors who have a history of investing in companies similar to yours. Look at their investment criteria and interests to ensure that your pitch aligns with their goals. Tailor your pitch to each investor you approach. Highlight the aspects of your business that are most relevant to their interests and show how your company can help them achieve their goals. This personalized approach will increase your chances of success. Negotiating deal terms. When negotiating a funding deal, there are several key terms that you should be aware of. These include valuation, equity, and investor rights. Valuation refers to the overall worth of your company, while equity determines how much ownership investors will have in your business. Investor rights can include things like board seats, veto power, and liquidation preferences. To negotiate favorable terms, it's important to do your research and understand what investors are looking for. You should also be prepared to make concessions and compromises, but always keep in mind the long-term goals of your business. It's also a good idea to have a lawyer or experienced advisor on your side to help navigate the negotiation process. Financial management. Financial management is crucial for high-growth businesses as it helps in tracking business performance and making informed decisions. It involves creating financial statements and using various metrics to analyze the financial health of the business. Financial statements include the income statement, balance sheet, and cash flow statement. These statements provide a snapshot of the business's financial position, profitability, and cash flow. Metrics such as revenue growth rate, gross profit margin, and net profit margin are used to analyze the business's financial performance. These metrics help in identifying areas where the business is performing well and areas where improvements can be made. For example, a high revenue growth rate indicates that the business is growing quickly, while a low gross profit margin indicates that the business may need to reduce its costs. Conclusion. In conclusion, navigating the world of investment is a crucial step in funding your future. By understanding the basics of investing, identifying your financial goals, and conducting thorough research, you can make informed decisions that align with your objectives. Whether you choose stocks, bonds, real estate, or other investment options, it is essential to diversify your portfolio to manage risks effectively. Additionally, seeking professional advice, staying updated on market trends, and continuously monitoring your investments can help you adapt to changing economic conditions and optimize your returns. Remember, investing is a long-term commitment that requires patience, discipline, and a willingness to learn from both successes and failures. With careful planning and a proactive approach, you can take control of your financial future and achieve your desired outcomes. In today's dynamic and fast-paced financial landscape, funding your future through investment is more important than ever. The traditional methods of saving and relying solely on fixed income sources may not be sufficient to meet your long-term financial goals. Investing allows you to put your money to work and potentially earn higher returns, helping you build wealth and secure your financial future. However, the world of investment can be complex and intimidating, especially for newcomers. It is crucial to educate yourself and develop a solid understanding of the various investment options available to you. This includes stocks, bonds, mutual funds, real estate, and other alternative investments. Each option carries its own set of risks and rewards, and it's important to diversify your portfolio to minimize risk.
Thanks for watching. For more information, like, comment, and subscribe our channel.